Financial independence. What it really takes. Most people think financial independence means never working again. They're wrong. And that single misconception is exactly why 90% of Americans will never achieve it. Hey, I'm breaking down what financial independence actually requires, the real numbers you need to hit, and the 3 non-negotiable moves that separate people who make it from people who don't. Let's start with the truth nobody wants to hear. Financial independence isn't about luck. It's not about your salary. It's about one brutal equation that most people refuse to do the math on. Here it's, take your annual expenses, multiply that by 25. That number? That's your target. That's the number where you can live off 4% withdrawals every single year forever without touching principal. Let me make this real for you. If you spend $30,000 a year, you need $750,000 saved. If you spend $50,000 a year, you need $1.25 million. If you spend $70,000, you're looking at $1.75 million. This is the 25 times rule. It comes from the 4% safe withdrawal rate that's been proven across decades of market data. It works. It's not sexy, but it works. Now here's where people get stuck. They look at that number and panic. 1.75 million feels impossible. So they quit before they start. Don't be that person. Part 1. The math that changes everything. Let's talk about what actually gets you there, because compound interest isn't just a concept. It's your secret weapon. Say you're 28 years old. You commit to saving $12,000 per year. That's $1,000 per month. You throw it into a Roth IRA and a taxable brokerage account invested in VU or VTI. Total market index funds. You're not trying to beat the market. You're just buying the whole market. Over 30 years. Assuming a 7% average annual return, which is actually conservative for the stock market. That $1,000 per month turns into $1.47 million. You didn't do anything special. You didn't get rich quick. You didn't start a business that exploded. You just invested consistently and let time do the work. But here's the thing that separates the people who actually pull this off from people who read about it and do nothing. Consistency beats perfection every single time. You don't need the perfect investment. You don't need to find the next Apple stock. You need to automate your savings so you never see the money. Set up automatic transfers from your paycheck. Max out your 401k if your company matches it, because that's free money you're literally leaving on the table if you don't. The match is 20 to 100% returns instantly. There's no investment that beats that. Part 2. The real obstacles. 95% of people who fail at financial independence fail for one reason. Lifestyle inflation. You get a raise. Your expenses go up. You get a bonus. Your expenses go up. You pay off your car. You buy a newer car. It's automatic. It's unconscious. And it destroys your path to independence before you even realize what happened. Here's the fix. Decide right now what your lifestyle costs. Write it down. Rent, food, transportation, actual necessities. Then make a rule. When your income increases, only 50% of that increase gets added to your lifestyle. The other 50% goes straight to investments. This single decision is why some people hit financial independence by 40 and others are still grinding at 65. Part 3. The behavior that matters most. Financial independence is 90% psychology and 10% math. You already know the math. Spend less than you earn. Invest the difference consistently. Let compound interest work. The psychology is where most people fail. You need to fall in love with the boring things. Index funds are boring. Consistent saving is boring. Watching your portfolio grow slowly is boring. But boring wins. Every single time. Boring wins. You also need a real number. Not a vague feeling that you want to be rich. An actual target. If you spend $4,000 a month, your number is 1.2 million. Write it on your wall. Check your progress quarterly. Make it real. The last thing nobody talks about. Find your community. Join Reddit's financial independence communities. Follow people actually doing this. Talk to friends about money even though it's weird. Because when you're surrounded by people building real wealth instead of chasing status, the peer pressure changes. And peer pressure becomes your biggest advantage instead of your biggest obstacle. Final call. You now know more than 90% of Americans about what actually gets you to financial independence. The 25 times rule. The power of consistency over perfection. The trap of lifestyle inflation. And the psychology that separates people who make it from people who don't. The question is, are you actually going to do something with this knowledge? Hit subscribe. Drop a comment telling me your financial independence number. And I'll see you in the next one.